The 1031 exchange in real estate is really a legal tool to help you grow your wealth in real estate exponentially. Today, I'm going to tell you what it is, how to use it, and how it can make you rich. Make me a deal. If you get any value or information out of today's video, hit that like and subscribe button. I haven't made a studio video in a little while because I've actually been making business vlogs and vlogging my experience of being a business owner through this, basically recession that we're already in. And I've also recently got my real estate license. So if you're looking to buy, sell, or invest with the best, definitely give me a call or an email or a text, or my information is pretty much everywhere. Greyson Roberts at kw.com. I operate in the greater Springfield, Missouri area, but if you're looking for a real estate agent nationwide, I can find you the best agent in your neighborhood. And also, since we're talking about growing our wealth, it would make the most sense for me to tell you guys about Webull. And I'll tell you why. Webull is my favorite online stock brokerage, and they're going to pay you to sign up instead of you paying the other way around. That's right. Today's sponsor is going to pay you in the form of a free sign-up bonus. Now, I've been using Webull for like over 3 to 4 years. And I've never paid them a dime. I invest in stocks there. You can do crypto there if you want. And basically, here's the deal. All you got to do is click the link in my description, sign up for it, fund your account with as little as 1 cent, and they're going to give you 6 free stocks. Usually the stocks are going to be worth at least $3 a piece, all the way up to $12,600 as a combined total. Plus $5 worth of free crypto when you sign up for the crypto part of it. Webull has been a long-term sponsor for damn near every single video across multiple of my channels, and I can't thank them enough. And listen, it's free money, folks. You can cash it out by the dip or cash it out and buy the bills because, you know, inflation. Anyway, let's talk about the 1031 exchange. I've seen some videos on YouTube explaining the 1031 exchange in not enough detail at all. In fact, leaving it way too vague to the point where it's not even helpful. And then I've seen videos explaining the 1031 exchange into way too much detail where it's not helpful because beginners become overwhelmed. My mission here today is to give you an explanation of the 1031 exchange, what it is, and how to use it into your advantage in kind of a happy medium. The 1031 exchange is basically a way for real estate investors to defer their taxes to a later date. And deferring your tax obligation basically just means, hey, I'm not going to pay taxes today. I'll pay taxes sometime indefinitely in the future. But we'll talk more about when that day arrives a little bit later. Spoiler alert, technically, you can never pay it. It's called deferring till you die. Now, rules. When can you use the 1031 exchange? And this is only for investment properties, not your primary residence. And this also does not apply towards house flippers. Now, with a personal property, you are actually allowed to have your own tax benefits. And you are actually allowed a capital gain of $250,000 in your personal property before you have to pay taxes. So you buy a house for $100,000 and you sell it for $350,000. You have to pay no taxes on the first $250,000. Anything above that, you do have to pay taxes on. Now, another benefit of getting married. That $250,000 capital gains tax pretty much exemption applies per person. So essentially, you can get up to $500,000 in tax-free gains on your personal property. So even though the 1031 exchange doesn't apply for a personal property, the capital gains tax exemption is honestly about as good as it gets. So you don't have to worry about that. Unfortunately, that tax gain doesn't apply for house flippers either. So basically, we're not talking about house flipping today. All right, so back to buy and hold real estate investments and taking advantage of the 1031. So let's say you have property A and you want to sell that property, but you sell it for more than you bought it for, hopefully. Well, then you're going to use the 1031 exchange. Once you sell your property, subject A property, you must find a like-kind property within 45 days, otherwise you have to pay taxes. Now, I know what you're thinking. Sell property A, and I have to buy future property B within 45 days. And if you know anything about real estate, you know that 45 days is a really short time, but there's a little bit we can do about that. You actually have 6 months, 180 days to actually close on the property. So you have plenty of time to do your due diligence. But if you decide to back out after 100 days, that 45 days doesn't restart. You get 45 days to identify up to 3 properties. So you do have backups. Now, the 45-day window can be a little bit of a pressure, especially on beginner investors. So don't get a bad deal for the sake of saving your 1031. At the end of the day, a bad deal is a bad deal. So I'm going to pop up on a screen right now the 1031 exchange, and I'm not going to go into the exact details. But basically, if you buy a property, sell it for a profit, pay capital gains tax, use that amount of money to then buy another property and rinse and repeat, your wealth will be significantly stumped. Now you can see the other line representing the 1031 exchange tax deferment. Basically, you're not paying taxes every time you sell your property, so you have more money to go invest in a more expensive property. And you rinse and repeat that until one day you just pay taxes on everything. So as you can see, taking advantage of the 1031 exchange, not paying taxes, and rolling that profit over into bigger and bigger and bigger deals, you will exponentially grow your wealth in real estate much quicker. Now back to the whole defer till you die. Basically, you can defer until you die, and then your family inherits your properties with little to no tax obligations. So they get all of your properties for basically free. But if you want to cash out and retire, you do have to pay all of the taxes that have backlogged on all of those previous properties. But still, it helps you grow your wealth quicker. As you can see, it's very important that you get a solid understanding of the 1031 exchange because it's a awesome legal loophole. Now, talking about cash flow with your rental properties, I'm not a CPA, but there may be tax benefits there as well. Now, back to a like-kind property. What is a like-kind property? You might be thinking, okay, if I sell a 3-bedroom, 2-bath house with a 2-car garage, 1,200 square foot, that's basically what I have to roll my money into. Not true. A like-kind property can be commercial real estate. It could be a strip center, a mall. It could be a church. It could be a apartment complex, single family, industrial. It could really be any sector of real estate. You can sell one property, one single family home, and buy 2 single family homes. You can sell a 6-unit apartment complex and buy 2 great big homes. You can do whatever you want as long as it's another income producing investment property. You can trade an industrial warehouse for a triple net commercial deal. I mean, it's pretty flexible, honestly. The only kind of picky part of the 1031 exchange is that 45-day window. But like I said, you're allowed to identify up to 3 properties in case, okay, this one doesn't work out in the due diligence phase. This one doesn't work out. We've still got, so you have options. And you can also invest in any region of the country. So it really broadens your horizon. Now, some people will go wherever the deal goes. Okay, I'll buy a deal big enough that where it can sustain itself, have property managers and on-site maintenance. Or maybe it's, like I said, a triple net deal where the tenant's basically responsible for everything. Or maybe, you can invest in your own backyard. You can invest really anywhere in the country. So this was kind of one of those things where I was like, okay, this is too much detail for this video because people don't really need to know it. But you can actually sell an investment property for a vacation property. So let me just brush over this really quick just because it's kind of interesting and it's good to know. The property being sold must have been held for 24 months. And you must rent out the vacation property for 14 days out of every year to qualify. You can rent that out to friends or family as long as the rent is at fair market value. Now, I am not a CPA, I am not a tax expert, and the 1031 exchange is a tax loophole, legal loophole. Tax advantage. So I highly recommend any real in-depth questions you have, consult your CPA who is licensed in your state. All right, back to the standard 1031 exchange and what you need to know. Another rule, you must reinvest all of your capital gains from the previous property into the new property. It's called rolling over your 1031 exchange money. You buy subject A property for $100,000 and you sell it for $200,000. Well, if you want to, you can use that $200,000 to buy 2 $100,000 houses if you want. Basically, as long as at some point you've spent all the 1031 exchange money, doesn't matter how many properties you buy. So 180 days, kind of back to that, you have 45 days to identify up to 3 properties, and I highly suggest you pick the maximum because why wouldn't you? It lowers your risk of not taking advantage of the 1031. But then you have 180 days, 6 months to close on that property. But that also includes any improvements that are going to be done to the property. If any construction is complete after the 6 months is up, it will not be considered part of your 1031 exchange. And another very important rule of the 1031 exchange is that if you sell your property and you find another fantastic investment property, single family residence, but it's worth less than the property you just sold, you will be taxed on that difference because essentially it's profit and you're not deferring all of the money. And on top of construction, broker commissions, attorney fees, escrow fees, title insurance premiums, all of that can be paid with exchange funds. So there you have it. That's the 1031 exchange. What I think you need to know with not too much extra fluff, how it works, and most importantly, how it can exponentially help you grow your wealth in real estate. You're looking to buy, sell, or invest with the best in the greater Springfield, Missouri area. Shoot me an email, GreysonRoberts@kw.com. And if you're not in my area, but you're looking to buy, sell, or invest just with a really good agent, let me find one in your neighborhood. Thank you guys for hanging out. That's a 1031 exchange, and I'm glad that you stuck around. Hit that like and subscribe button, and I will see you in the next video.